We recently helped a client, let's call her Anna, okay, fake name. Anna is a foreign citizen, a truly wonderful person who moved to Italy a few years ago for work. She was very diligent. She kept her records, she understood her income taxes, and even used our online services to file her Italian tax return in time. Everything looked fine. She declared an employment income, she paid her Italian taxes on that income, and thought she was all set. However, Anna had a saving account back in her home country in the United States with a balance of 80,000 rounded up. This account earned a small amount of interest, let's say 100 per year. She declared this interest income on her Italian tax return, but here's where the trap was hidden. Anna, like many expats, was not aware of the specific requirements to declare the existence of the foreign financial assets themselves, not just the income they generate. And this is done in a specific section of framework, the Italian tax return, that's called Quadro RW. Anna filed her tax return without this Quadro RW for a US saving account. And now, according to the Italian tax law, if you are a tax resident of Italy, you are generally required to report all foreign financial assets and investments in the RW framework, the statements of January 1st and December 31st of the previous year, regardless where they're held, if their value exceeds a certain threshold. Fast forward a couple of years, Anna received a communication from the Italian tax agency. It was a notice informing her that there is a penalty pending for failing to declare foreign financial assets in the RW framework. And the fine in her case was 10% of the value of the undeclared asset. 10% of the 10,000. That's 8,000. 8,000 euros for a simple oversight. Not for evading taxes, but for not reporting the asset itself. She was devastated. She was confused, frustrated. She truly believed she had done everything right. This was not a case of an intentional wrongdoing. It was pure lack of knowledge about a very specific and often overlooked Italian tax regulation and obligation. We stepped in back in time. We helped Anna to understand the situation, navigating all the process of resolving this penalty. We got some discount. While we could mitigate some of the damage, the lesson was clear. This was a 8,000, if you want, mistake that was entirely something that could have been avoided with the right information. Now, let's look at another example. Let's consider Paolo, an Italian citizen who lived abroad for many years, and he returned to Italy, becoming an Italian tax resident again. And during his time abroad, Paolo had invested in a portfolio in stocks listed for, let's say, 120,000. Paolo consulted with an accountant here in Italy who helped him file his taxes, his tax return. However, very similar to Anna, the accountant Paolo initially hired and worked with was efficient in the start on Italian domestic rates, taxes, but was not specialized in international tax matters. And this is a common pitfall. Many local accountants, commercialistas, are fantastic at what they do, but international tax is a completely different beast. It's a different game. Paolo's stock dividends, let's say amount of 2,000 per year, were correctly declared for income, but the portfolio itself, those 120,000 worth of stocks, were not there in the RW. Why so important? Well, because for foreign investments like stocks, reporting obligation in the RW framework applies regardless of the value. Even just €1, it needs to be declared. The scope of the RW framework, not just to tax the income for foreign assets, but for the Italian tax agency to have a clear picture of all the assets held abroad by its tax residents. It's part of the Italian effort to fight capital flight and ensure financial communication. After a few years, Paolo also received a notice. And for him, the penalty was even higher due to the larger amount, of course. The fine was around 5% of the total value of the asset for each year they were not reported, up to a maximum of 15%. So For his 120,000 stock portfolio, the fees was around 10, 12,000. And again, something that came from not being compliant. It was not intentional. These two stories, Anna and Paolo's one, are not unique. They are reflections of what we see every day in our practice. The Italian tax system, especially concerning international expats, is complex. It's not designed to be easily navigated by anyone, and the consequences for minor missteps can be significant. So, what's the core takeaway here? It's simple. If you are an Italian tax resident, you must declare your financial assets abroad and investments in Quadro RW. And this includes bank account, investment portfolios, real estate, crypto, and more. The rules for what to declare and how to declare it may change based on the type of assets and the value, but the general principle is pretty clear and straightforward. If you have assets outside of Italy, the Italian Revenue Agency wants to know. Understanding these obligations is your first line of defense. It's about becoming bulletproof against potential penalties. They will find out years later. It's about being proactive, not reactive, because once the tax agency sends you the notice, they already hit you. You're already on the back foot. If you have foreign assets and you are an Italian tax resident, or you're planning to become one, we want to educate you on the RW framework. And this is not just a form, it's a critical factor of your financial security here in Italy.
At Studio Rigo, we provide world-class tax and financial guidance for expats and international professionals in Italy. We don't just help you stay compliant. We craft strategic tax solutions tailored to high-level individuals who demand precision and expertise. If you are serious about optimizing your tax position, visit our website or connect with us on social media. We work with those who value excellence, and we look forward to assisting you. Thank you for watching. See you in the next video.